Earlier this week, SoFi lost one of their key executives, and in addition to this, short interest numbers were released and remain very elevated. The stock was down 10% this week. It was down 20% over the past month. I'm going to talk about this in this video, along with all the other pieces of news for SoFi that I've been seeing in the market. Now, if I'm being entirely honest, this wasn't a huge news week for SoFi compared to some of the previous weeks that we had, particularly with the NBA news, with the convertible senior notes offering. This week, the biggest news was probably the short interest numbers and the executive leaving the company, but even that doesn't tell you the full story of where we are right now. And so I want to dive a little bit deeper into that. But before I do that, as always, I do weekly recaps for SoFi News every Friday, and if you enjoy these videos, subscribe for more. The stock price this week closed down about 10%, closing off the week at about $7 per share. And it seems that SoFi is on this downtrend over the past month. Meanwhile, the rest of the market is, hitting all-time highs essentially. And so that's something that we're going to talk about in this video. Over the weekend, I posted about Aaron Webster resigning from SoFi. This was found in the company's 8K filing. And just to recap the timeline of recent events here with regards to Aaron Webster, you'll remember that on February 7th, he was replaced as the company's chief risk officer with a gentleman named Arun Pinto. He spent over 9 years at JP Morgan Chase, where he was the chief risk officer, and more recently at Wells Fargo, where he spent 2.5 years as the chief risk officer there. Now, Webster, by contrast, was moved from the chief risk officer position down to an executive vice president role of global operations, business risk, in Latin America. I mentioned in a previous video that he was still reporting into Anthony Noto directly during this entire transition period. So while he may not have been a C-suite directly with a chief in his title, he was still on the leadership team. However, over the weekend on March 6th, the 8K filing came out, and it seems that just 1 month after this shift, Webster resigned from SoFi effective March 15th, or today, essentially. And what makes this more interesting is on Wednesday, on March 13th, PayPal announced Webster as their newest executive vice president. Alex Chris posted about this on X himself, saying, quote, "I'm excited that Aaron J. Webster will join the PayPal team as executive vice president, chief enterprise services officer, to lead global financial crimes and fraud prevention, regulatory and government relations, and risk and compliance management on March 18th. Now, the first thought I had was, I swear they just make all of these titles up. It just sounds like a bunch of made up business jargon to me. I mean, executive vice president, chief enterprise services officer doesn't mean anything to me, but I digress. The second thing to note is that the starting date officially on paper for Aaron Webster is this upcoming Monday. So 1 business day from leaving SoFi to starting on PayPal. And this move, in my eyes, I mean, it looks like a lateral move because going back to the titles for a second, you're switching one EVP title for another. They're both executive vice president level titles. And of course, people online are speculating around what could this mean, and they're forming their own opinions on whether Webster was an effective employee or whether there was an internal disagreement or whether he was not effective. I mean, I own both PayPal and SoFi, so I don't really have too strong opinions on this specifically. I wouldn't be looking too deeply into it, simply chalking this up to one of the cases of this is where management knows best, and this is where we as investors have to trust management. I think for SoFi, getting Arun Pinto in the door was a big deal given his previous experience at JPM and at Wells Fargo. With regards to Webster, I mean, the news was well received for PayPal, I guess, on that given day because the stock price was up several percentage points on Wednesday. And the other interesting piece here that I found particularly was with the timing around this news. This week we had a lot of Form 4s coming out for executives selling stock, and this was as a result of their restricted stock units vesting. And essentially they had to sell for tax purposes. So we saw similar documents for Anthony Noto, Jeremy Rischel, the CTO, Chad Borton, and Aaron Webster. And again, this doesn't mean too much because this was selling as a result of the stock-based compensation. When the restricted stock units vest, they have tax obligations to pay, and they sell some of that stock to pay off the tax obligations. Now, the funny part about this was that the last day that Aaron Webster had at SoFi was March 15th. Essentially, he waited until the stocks vested and then he started on PayPal on the very next business day. You could make an argument either way to say it was smart or to say it's frustrating. I'm more of in the camp of saying it's frustrating, but either way, I found it fairly interesting, just the timing around that specifically. Moving on, I want to talk about a small piece of news before I move on to the larger theme of this video, which is around the sentiment out there. The small piece of news, I saw Chris Hager, Data Driven Investing, posting about this. SoFi's first securitization deal of the year received a AA rating from Fitch. Now, Chris posted about this in way more detail than I'm going to cover in this video. Obviously we would have preferred a AAA rating on that scale, but a AA rating is still fairly solid. Here's Fitch's description of what a AA rating means. And this is their own words for their own rating agency. I'm going to read this out loud. AA ratings denote expectations of a very low default risk. They indicate very strong capacity for payments of financial commitments. This capacity is not significantly vulnerable to foreseeable events. Obviously, AAA rating is like the highest you can possibly get, but AA rating still is very positive for SoFi. But I won't go too much in depth on that specifically. I know Chris has a full breakdown that you can read after this video. And now I want to move on to the wider theme of this video. In terms of news, I saw Piper Sandler on Monday come out with a neutral rating on SoFi, but they did lower their price target to $8 from $8.50. By contrast, on Tuesday, Truist came out and responded, maintaining their $14 price target and their buy rating on the company. And their analyst, Andrew Jeffrey, said, buy the fear for SoFi. SoFi's down year to date, it's down month to date, it's down week to date. So it makes sense why Andrew Jeffrey is sort of pounding the table on SoFi stock, especially because they're now profitable. They have this deal inked with the NBA, so on and so forth. The reasons go on as to the fundamental sort of underpinnings of why you should buy SoFi as a company. But Andrew Jeffries basically reiterated that in their note. I think they have one of the highest price targets on the street for SoFi at $14 per share with their buy rating. Now, coincidentally, also on Monday, we also got the short interest updated per the end of February by NASDAQ. And this showed a 16.9% short interest on the company with 154 million shares sold short. Now, this is slightly lower than the 158 million shares sold short record we had a few weeks before. But keep in mind that there is a 2-week delay in these numbers. These numbers are as of February 29th. And over the past 2 weeks since that time, we've seen short interest actually rising. There's a couple of paid services out there that show short interest on a more recent basis than a 2-week delay. And from some stuff that I've seen, I'm expecting it to even break new records by the next time we report. And then the other thing to keep in mind is that for the time period between mid-February and end of February, which is when this short interest number is reporting, SoFi stock was actually up. It makes sense why that short interest would go down slightly. But for the time period end of February to mid-March, SoFi stock is massively down from the $9 range into the $7 range. We're expecting short interest to actually even be higher than that in the next reporting over the next couple of weeks. That's actually my base expectation, is that they're going to break a new record in terms of short interest over the next couple of weeks. And so when you put all these things together, the analyst notes, the short interest numbers, the stock price falling every week, I think the main theme here that a lot of the retail community is feeling is around sentiment. I've seen this predominantly through the price action in a market that is filled with emotional retail investors that are upset at the price action not being where they think it should be. And that gets amplified because it seems as though everything around us is going up and reaching all-time highs, and it seems as though SoFi is just falling or staying stagnant. I saw multiple people actually posting about this as well this week, so I think it's very topical. I think Tanner did a great FinTech Frenzy last night about this as well, and I'm sure we're going to talk about it in the SoFi Weekly later tonight. And, the fact of the matter is that one of the ways to justify holding this company, buying more of this company, still advocating for this company during this time is to really go back to the fundamental views of the company and the reason why you're invested in the first place. I saw this great post by Data Driven Investing by Chris Hager, comparing the sentiment of SoFi to the sentiment of Tesla in that 2015 to 2019 time period, where basically the company was executing from the actual fundamental perspective, but the stock was not reflecting that. And a lot of people are now comparing SoFi to that coiled spring, where you have a long period of time where it stays in a channel, and then when it breaks out big, because essentially you're getting a better and better deal from the company. Now, I don't really love talking about the stock price that much, because if the stock were $15 tomorrow, I don't think I would sell because I'm invested in this for the long term. And so I'm definitely not going to sell when the stock hits $7 per share. But it seems as though a lot of the groups of people that are upset when the stock hits 7 are the same groups of people that would unload the stock the moment it hits 11 or 12. Those people are just shorter term minded in general. And when it comes to myself, I think that SoFi is very difficult to judge in the short term. But if I zoom out, and personally, when I look at this company in terms of years, there's nothing that's been going on over the past couple of weeks that should change anyone's opinion around the company's ability to execute. And I don't think I talk about that too much, but I have been buying SoFi more heavily over the past 2 weeks. I posted about that multiple times on X. I'm doing that in spite of having a very large position in the company already. And the reason why is because I'm able to take advantage of a lot of these emotional traders in the market who look at the stock price and they're absolutely discouraged by the fact that the stock is not up when they think it should be up, or because the stock is taking too long to get there, or because Nvidia just hit all-time highs, therefore SoFi should be up as well because the entire market is making money. And that's just not the way to look at it necessarily. You are buying and holding this company and you're going to do that for a long period of time. At the end of the day, I think the best financial decision you can make is by looking at that company and that company's financial position, that company's ability to execute. What you'll see is that the company is in a better spot today than it was 6 months ago. And it's definitely in a better spot today than it was 12 months ago. And if the market decides to give you the same exact price for that company, that's maybe twice as good or 3 times as good, then I personally will happily take that. And so I think these are conclusions that you have to come to on your own. I personally bought more SoFi this week. I personally bought more SoFi last week. I'm definitely not even thinking about selling. And don't get me wrong, like I'm discouraged with everybody else because I think that the company is below its fair value, but I'm still taking advantage of that fact and buying more. It's not like I'm giving up on the company because at the end of the day, I mean, I posted about this recently, but when SoFi was at $10, I really felt like I was underinvested. Like I didn't have an ability to average down as much as I wanted to, that I didn't have as much invested in this company, even though it's, my second largest position in my portfolio. And I told myself back then when it was at $10, oh boy, I wish I could get this at 7. And now that it is at 7, yeah, of course I'm buying it again. And so I recognize my own emotions. I recognize the sentiment out there, the people's emotions. I go on StockTwits, I go on Reddit, I go on X, and I see people posting about SoFi. I see every time that Anthony Noto is posting something, everybody's responding in the comments, basically asking him to make a statement or buy more stock or get everybody excited about the stock price to pump it up. That's not his job. His job is to execute as a CEO and to get the company there. It's not necessarily to get the stock price pumped so you can trade it and sell it in a couple weeks and then make 20% or 30% or 50% and take your money and put it somewhere else. And so I think that the long-term investors realize this is an opportunity to buy more. The people who are more short-term minded, their time frame is maybe 6 months or maybe a year. For me, my time frame for SoFi is multiple years. And I don't think anybody's wrong in that scenario, right? If my time frame is 5 years or 10 years for SoFi, I don't care if it stays at 7 for another year or 2 years or whatever, because I know that eventually it's going to get to that point where it's tethered to the fundamentals of the business. But if I was a trader and I was putting a lump sum of money today with a goal of getting the best return in 6 months, yeah, I would be frustrated at SoFi. I would be annoyed because the stock is not moving like I expect it to move. And I would say, yeah, there's better opportunities in the market for me to put my money. But because those goals are different, I'm not necessarily saying that today. I'm just buying more stock. So I don't know. That's just my diatribe. I will hop off my soapbox now and I'll wrap up this video. Join us tonight on the SoFi Weekly Podcast on this channel where we're probably going to talk about this topic along with other pieces of news for SoFi. We're more than likely going to have a special guest on tonight as well. And I don't think this special guest has ever been on the channel before. So it's going to be a fun one. Definitely make sure to join on this channel at 10 p.m. Eastern tonight. For right now, this is the Fundamentals Investing Podcast. Thank you so much for listening.